The three most expensive real estate markets in the country right now are 1, San Jose, 2, San Francisco, 3, Anaheim, 4, Honolulu, and 5, San Diego. That is a little bit of a concerning trend. What do you notice about 4 of those 5 most expensive cities? They're all located in California. Why is this an issue? Why does it make me worried? Well, I focus on helping people with large student loan balances live financially successful lives through making student loan plans for them at studentloanplanner.com. That's what we do, but the problem is if somebody's making a bad decision in their other parts of their financial life, it influences them as the borrower, and that's what I care about. Now, California is a place where there's a lot of people with a lot of student loan balances. Living expenses are very high. There's a lot of different programs that out there. A lot of the different occupations in California have far more stringent educational requirements than other states, so people have to get more credentials to be able to practice there. So all of these different factors compound into California having a very high number of student loan borrowers with very high debt loads. What's interesting about that is those people with very high debt loads will then go around and try to buy a house, which makes sense. The problem with California, though, is we just had this change to the underwriting guidelines with Freddie Mac and Fannie Mae, and now what they will do is just consider your student loan payment, income-based payment, as your payment that you have to make, even if you have $300,000 or $400,000 of student loan debt. So they will say, okay, this $300 or $400 a month payment on income-based repayment is what you actually have to pay, and we will lend to you based off of that being your payment instead of the way it used to be, which is 1% of the total balance. So in that case, you would not be able to qualify for a mortgage. With these new underwriting guidelines, you can qualify for one. So in California, people are having to reach to afford a home that's even reasonable at all, because California is super expensive for a variety of reasons. Of course, it has really good weather. We know the reasons why people want to live in California. They have good job market as well. There's a lot of tech money floating around, a lot of private companies that are worth tons of money, a lot of workers that are getting crazy high stock options that are giving them tons of cash to buy real estate with. So we know the reasons why California real estate has been scarce for supply reasons. Also, with zoning laws, California is one of the most extreme in the country for limiting the supply of new real estate construction, which obviously forces prices upwards. And there's a lot of evidence that this is kind of done at the behest of property holders that currently have property because they want their values to remain high and then continue to increase. The reason why I'm concerned is I had a case recently of a student loan borrower who basically said, I have to buy this piece of property no matter what the price. This borrower was a high-income medical professional. She wanted to pay basically any price for this piece of property in California. And I realized this is the kind of psychology that happens in a market right before you have some sort of major correction. So I'm not saying that there will be a correction in California real estate. I'm just saying that there's a big risk that there could be one. If you look at California relative to the rest of the country, the payment to the income to payment ratio in California, in other words, your amount that you're making relative to your payment, it's one of the worst ratios in the country right now. It's like 40% of your income is going to mortgage payment and overall. And in certain cities, that ratio is even worse. Now, if there's enough rich people to buy houses, then it doesn't matter, right? In theory. The problem is you just had the new Tax Cuts and Jobs Act come out that limits total deductions for state and local and property taxes to only $10,000. This used to be fully deductible, and a lot of people in California are going to get slammed when they realize that their $50,000 property tax and their $100,000 income tax is no longer going to be deductible. So I think that what you're going to see is potentially the bottom end of the property market in California might hold up okay, but that house, in the $500,000 to $2 million range could really get hammered. So I just want people to be very cautious. If you can buy a house in California for less than 2 times your income, then go right ahead. I'm not really concerned about folks that are buying at a responsible price. Even if that price goes down, assuming that you're going to be in the home for more than 5 years, which is the only reason you would buy a house anyway, you will be okay. But if you're buying a house and reaching to afford one at 3 times your income or more, you could really get hurt in the next California real estate crash. So be very careful. Of course, if you want a student loan plan, if you have a lot of student loan debt and you're thinking about how that impacts you buying a house, we'd love to make a plan for you. Just visit studentloanplanner.com, click on the Hire Us page. You can read about the details of how we make plans for people. Thanks so much, and be careful about buying California real estate.